Give me 1 sec, I'm almost ready. Okay, where's the chat? Fresh participants chat. There it is. Okay, can everyone hear me okay? You can just type in the chat. Okay, let's begin this session. Today, I want to go through and talk about how to trade simple. I want to go through the rules of the IMTF indicator to talk about how to sit there and trade with the IMTF indicator very simply and to also use it for forecasting. What do I mean by forecasting? A lot of us spend a lot of time behind trades. We analyze a chart, determine it's bullish, bearish, and then we sit there and put the trade on. Then we wait patiently for the entry to occur. Then once it enters, then we sit there and watch that trade going forward. And we spend a lot of time behind that trade. And then what happens? It loses. Well, we've not only lost money monetary-wise, but we also lose money with time. And that's something that has to stop. Something we talked about earlier is that we sit there and we use all these indicators, but we never use anything for forecasting. Sit there and predict what are our probabilities if I enter a trade to get to my target before I even enter. Okay, and that's one of the things I want to show you how you're going to do that very simply with the IMTF indicator. So we are recording this and this will be available. So just before we begin, we want to go for a normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital, cannot be copied or distributed without our written permission. We are broker neutral, so we do not support any particular charting or package out there. Today, for presentation purposes, we will be using TradingView for our illustration. Okay, so let me stop the share and let's go straight to our screen. Now, we're going to discuss a trade we took. This is the currency here, CAD yen. This is a 30-minute time frame, and the charting package is TradingView. Okay, here I kind of stripped it bare of almost everything except the IMTF indicator and its bare bone necessity. Okay, now what I'm about to go through will work for any instrument in any time frame. Okay, so it will work for crypto, work for futures, stocks, currencies, or anything else out there. It will work for any time frame too, from scalping time frames, day trading time frames, swing, daily, weekly, monthly, and so forth. So everything we always do is basically does not discriminate on instrument and time frame at all. Okay, so I want to make sure everyone understands that before I begin. I'm going to go through an example of a bearish trade. Why? Most retail people understand bullish, but they have no concept of bearish at all. And in order for you to become a professional trader, you have to be able to sit there and take bullish and bearish trades. And that's what I'm going to do here. Okay. The first thing you need to be able to do when you look at the instruments, determine if there's an opportunity there. And if there's an opportunity there, is it bullish? That means you're betting on it going up, or is it bearish where you're betting on it going down? A lot of people, including me years ago, used tons of indicators, and they were pretty much was death by indicators on our charts. And what you do is you use these indicators here, it tells you to be bullish, or another one tells you to be bearish, and so forth. So there's many indicators out there that you could use, and what happens is most people use multiple different indicators to sit there and determine if the instrument's bullish or bearish. And a lot of people also will sit there and spend hours, even minutes, trying to determine if an instrument's bullish and bearish. And you cannot do that. Okay, that's a lot of wasted time out there. You need to be able to look at an instrument for any instrument into any time frame and determine right away if it's bullish or bearish. Is there an opportunity there or not? Okay. And that's the hardest thing most traders have a hard time doing. They spend the most time there and they basically fail. So what we done was we have an indicator that's available for various charting platforms. Right now we're showing you in TradingView, and we dumbed it down. So behind the indicator, we actually have a robot that's physically sitting there behind the scenes, entering trades, exiting trades, everything based on the rules that we give you. On the front end, we dumbed it down to a point. It's visual images completely. Why? It's so that basically anyone could sit there and trade, including my 11-year-old son or anyone out there. The goal is to keep things simple and to concentrate on what really matters, which is money management. Is that clear with everyone? Yes? We don't want to sit there and concentrate too much on technicals. What really makes it different in order for us to be consistently profitable is money management. Believe it or not, every trader, even how complex they make things to be, is profitable at one point in their trade. But at some point, they lose that money and go round trip. And that's the number one reason why 98% of retail traders fail, and that's got to stop. I was able to turn from retail trader to professional, so everyone can. But the thing is that I had to give up my engineering side. I had to get rid of the complexity that I had in my trading and dumb it down. That means I had to get rid of all the indicators I had and sit there and simplify and sit there and think about money management over technical analysis. And that's what we're going to show you today. So first things first, how do you recognize if there's an opportunity on the chart, whether it be bullish or bearish? It's simple for us. What we did was we shaded the background green, red, or green or red. If you see a red shade, that means it's a bearish opportunity. That means there's an opportunity to go short. If you see a green shaded area, you're going to see an opportunity to go long. Doesn't mean you're going to go jumping in the trade, but it just means as long as the background is green, you have an opportunity to place a buy order. If the background goes away, then there is no more an opportunity. If you see a red shaded area, that basically means there's a bearish opportunity there, and you could bet on this going down. So very easily, by looking at the background here, you could determine if there's a bullish opportunity, which is green, or bearish opportunity, which is red. If your current bar, which is right here, gives you no color background, that means there's no opportunity there at all. Move on to the next instrument, okay? So this is an opportunity last week for the CAD yen on a 30-minute time frame. I put this in bar replay mode so you could see exactly what the bars look like as they move forward when we were looking at the trade. So if you look here, this is an opportunity here. There's no opportunity here. And then all of a sudden here on April 20th at 13:30 Eastern Standard Time, okay, there was a red shaded background that appeared. Red basically means this is bearish, okay? That means I could bet on it going down. Now that you know there's an opportunity there, the next question is, where do I place my orders? It's very simple. We sit there and give you a visual image exactly where to place the orders. The blue dot in the shaded area is where you're going to basically place your entry order. Since it's in a red shaded area, you're going to put your sell stop order right there for a breakout trade right there at that blue dot. Then you're going to have an initial stop, which is your OCO order, which is that green dot right there. Now, do not worry about that risk right there. This is a setup. When you enter the trade, the green dots will typically move down so that what happens is when you enter the trade, the risk will be a lot lower, okay? Also, during the trade, how you manage the trade. You follow the green dots. These green dots move, and you're basically going to adjust your stop to those green dots. So initially, this is your initial stop right there, which is right there, the green dots. We give you the exact value where your stop should be. The blue dot is where your entry should be. And then what we do is we give you a first target there, which is these blue crosses right there. Everyone see that? So we give you all the information you need in order to place the orders. So when you have a red shaded area, that means you're now going to place a sell order at the blue dots, your target at the blue cross, and your initial stop, your OCO stop at the green dots. That is all the information you need right there to place an order. It's not hard. We're giving you all the information that you need. Do you guys have any questions up to this point? There's no more guessing, no more subjectivity at all. A lot of Fibonacci traders love Fibonacci. In fact, our Fibonacci video that we put out years ago is still the top video out there for us. But the problem with Fibonacci comes down to is subjective. Where do you draw the Fibonacci levels from? What pivot to what pivot? Do you use the highs of the price of the pivots, the lows of the price, the closing price? So if I sit there and teach a Fibonacci course, I have to cover all these scenarios. If I cover all those scenarios, everyone's going to be confused. Also, not everyone's going to give me the same scenario every single time. And that's where it becomes subjective. If you trade anything that's subjective, you're not trading a system. You're not trading the probabilities at all. And if you're not trading the probabilities, now you're gambling, okay? And that's the big difference there on going forward, okay? Here's the question. Entering a trade will always be outside the shaded area when it hits the blue dots. That's a big question, okay? So right now, as the shaded area appears, you could place your orders. If price reverses and the trade gets canceled, the shaded area will disappear. If price enters by hitting the blue dots, the shaded area will disappear. So if price gets to these blue dots and you enter, the very first time the shaded area disappears is basically your entry. So yes, the shaded area will disappear when you enter the trade, or shaded area will disappear if the trade setup becomes invalid. And why do we know to do that? Behind the system, behind this indicator is a system, a robot that's physically sitting there, entering and exiting the trades, manage the trades and everything behind the scenes. So it is a full, what you call a state machine behind it, where it's actually sitting there trading just like we're telling you to trade. So behind the scenes, it's actually selling here, it's managing the trade with that green dot, and it's looking to get to this blue cross here, just like you are doing as a human being physically with your brokerage, okay? So is that okay with you guys? Yes? Okay. So now, this is normal here where, you have a setup. Us, it's easy because of the shaded area. Then they tell you where to buy, where to sell, where your orders are and everything. So this is the critical part here. It's very dumbed down and very simple to a point you could always see everything from a visual aspect. Now, this is where the difference comes from. This is where research comes into play. This is where when we sat there and did research in the institutional world and created machines that did 40,000 trades, that's where the difference came into play, okay? When you do research, you're looking for past patterns to repeat currently and also in the future. Doesn't mean it's always going to happen, and that's why you have the stop at the green dot. But you're looking for these past patterns that are repeated with high probability in the past to a possibility they could repeat today. And what happens is this shade appears when that pattern starts to occur. Now what we need to do is we need to see what were the probabilities in the past for this pattern to succeed. So if I enter the trade, my goal is, if I enter the trade, what are my probabilities to get to this blue cross, which is my target? That's what I need to do. I need the past to tell me, is this a high probability trade where if I enter at the blue dots here, that I'm going to get to the blue cross here? And I need the past to tell me that based on what has happened in the history. It doesn't mean it's going to always happen, and that's why I have the green dots here as emergency stop to manage the risk. But I'm only going to enter this trade here if it has been a high probability situation in the past. Is everyone clear with that? Yes? So now, how do we predict? How do we forecast? Here's how we're going to do it. Here's a couple of rules we have, okay? We're not going to complicate things by telling you look at the higher time frame or look at the lower time frame at all. We're going to dumb it down. Because my 11-year-old son's never going to understand looking at this, scrolling back, doing this and that. Everything I went through on the journey to become the professional trader, an 11-year-old kid's never going to be able to do that at all. So I need to keep it simple. So what we did was we developed a couple of parameters here. And you could see there's 3 parameters here that we're going to focus on. See this D value right there? See that blue dash right there? And see that %S. Those are the 3 forecasting parameters we're going to use, okay? Based on these parameters here, it's going to tell me whether to place the orders or not place the orders. Is everyone good with that? If I place the orders, then I know I got a high probability to get to these blue crosses. Agreed? Yes? So how does it work? The biggest thing is, as a trend trader, you want to trade in the direction of the higher time frame, okay? And this D value here does that here. So what you're looking for is this D value here needs to be the same color as the shade, which is red. That's a perfect scenario right there. If it's any other color that's outside this red shaded area here, you're not going to sit there and put on that trade at all because it's got a low probability to sit there and fail. Not to go bearish, but either go into a consolidation state for a while or to turn around and try to go bullish. So counter trend traders are going to look for this color here, the D value here, to be a different color, not the same color as the shade. You as a trend trader is going to make sure this is red, which is the same color as this background. If you had a bullish opportunity, you want to make sure that D value is green. Everyone good with that? Okay. The second thing is that you want to look at the value here. It's 2. It could be any value except 0. If it's 0D, that's not good. That means you have a high probability that the higher time frame is in a consolidation state. It's red, it means bullish. It means it will be bullish consolidating if it's 0D. You do not want that at all. You want the higher time frame to start trending, so you want this value to be 1, 2, 3, 4, and so forth, and you also want it to be red. If this value is 0 or it's not red, you're not going to put this trade on at all. You're going to move on to the next opportunity. So that's the very first thing you're going to look for forecasting. Is there any question in regards to that? Nope. Okay. The second thing you're looking for is this %S. Okay. This deals with money management. You could sit there and enter a trade and you could be profitable by a couple of points and then a reverse. Is that good or bad? It's bad. You could sit there and spend hours behind a trade where you only make $1. Is that good or is that bad? That's bad. You want to make sure you enter a trade where it could sit there and move and you have enough reward where you can make some money with reward. Everyone understand that? Yes? So this is what that does. So what you're looking for is this %S to also be red, just like the red shaded area. So you're looking for this D value to be red and this %S to be red. And that's exactly what you're looking for here. If this was a different color, then I'm not going to sit there and take this trade at all because it's got a low probability of working if price does sit there and hit these blue dots. So I'm going to walk away at that point. Okay. And the last component I'm looking at is this blue dash here. This basically is the higher time frame support. Okay. And when you take a trade, especially a breakout trade, it's high probability if your higher time frame is with you. Okay. If your higher time frame is not with you, then you have to do it by yourself. But if your higher time frame is supporting you and also helping you, the chances of you going from these blue dots to these blue crosses is high. Not only is it high, but it also means you're going to get there fast, and the chances of you going for a drawdown is going to be low too. Okay. And what does drawdown mean? That means once you enter a trade, how far did your account go negative for that trade before it went positive? Okay, the lowest point it got in your trading account for that one particular trade is what you call a drawdown. If you don't want to know more about it, please do a Google search and you could see what that means. Okay, so what you're looking for is this here, okay, is basically the higher time frame support. What you want to do in the ideal scenario is that for a bearish, you want to sit there and break this blue dash before you enter. So to get to this blue dot, price will have to break that blue dash and then get to the blue dot. If it breaks that blue dash, that means the higher time frame is going to help you. Okay. If this blue dash was here, that means I'm going to enter and then try to go to the blue dash. That means I'm not going to get any higher time frame Hempel at all. So the ideal trade, the best trades you can look for is where this dash here is before the blue dots. Since this is bearish, you want it to be above the blue dots because your price is going down. So this is a good scenario here. This is a good trade here that I'm going to sit there and place an order. So the D value is not 0, it's red. %S is red, and the blue dash is before my blue dots. So here's an opportunity here where basically I'm going to place the order for this particular trade. I'm going to just put a simple reward risk tool here so you can see this trade here. And I'm going to shrink this down. Whoa, too much of a shrink. Let me shrink this down. Sorry, it takes a little while for these little reward risk tools. When they put them on the chart, they're so long. Boom, boom, boom. Okay, now we're getting there. Okay, so again, I'm going to put my entry at the blue dots. My initial stop is here. Of course, that's not my risk going into the trade. This is just a setup. And my blue cross is right there. Okay, now this is not 3 to 1. I understand this is 1 to 1. And the reason why is we purposely have sat there and added a buffer because there's new traders out there. As you're learning, you want to sit there and work on your win-loss ratio. You want to be able to sit there and have a good win-loss ratio where you could recognize good breakout trades. Once you could recognize those good breakout trades, then all you have to do is stick with the same system. That now what happens is you could decrease that risk here to a point it's 1/3 and it becomes 3 to 1. That's as simple as that. So as a beginning trader, as you're learning to recognize good breakout trades, what makes a good breakout trade and so forth, you want to have that extra risk there so you don't get stopped out for no reason at all. And that's what we have there. Okay, so this is my trade here. Okay, now what we're going to do is we're going to finish the replay going forward. Okay, boom, I enter the trade. Notice one thing. Okay, let me move this reward risk tool to the left, right a little. Okay, as soon as I entered and hit the blue dot, the shaded area disappeared. It means there's no longer a selling opportunity because I'm in the trade. Okay, so that's the first good sign there. Okay, now I'm in the trade, my green dot moved to here. So this is my initial reward risk going into the trade right there. Didn't adjust that much, not worried at all. My goal is to have a set of rules where I'm not worried about the green dots. I'm not worried about price going there. I'm now concerned on it going to the blue crosses. All I've done is I've done research to show me what my probabilities are to get here. So I'm thinking about price coming to these blue crosses fast. And that's what I'm looking at. Now, we did forecasting. A lot of games are always being played on entry. And everyone has to recognize that. So we have an entry validation that occurs to see if the trade is really real or they're playing games. And we don't do it for 1 bar, we do it for 2 bars. So it's your entry bar and next bar is what we're doing, is we're doing validation, okay? And how easy is the validation? It's easy as this. First, you look below at this blue target here, make sure that cross is blue. If it's any other color, like a light blue or gray or black or anything, you're going to exit the trade. That means they're playing games and the setup is fake completely. So you're going to exit that trade completely. So if this was not dark blue, you're going to automatically exit the trade because they're playing games at the entry. Okay. Second thing you want to do is that this %E, you want it to be red, the same color as a shade, or if you want it to be extremely good, you want it to be blue. Blue is extremely good. And in here, it tells you you're very, very, very powerful. And blue is extremely good here. So you're doing that. Not only that, but you want this value to increase. So notice it went from 86% to 94. That means the trading time frame, 30-minute, got stronger. If it got stronger, it means it's getting stronger going into the entry. That means it's got a high probability to get to these blue crosses. If this value had gone down, if it was blue or red and it had gone down, that's not good at all. So we're looking at the strength with this %S and this %E of the trading time frame, which is the 30-minute. So the %E and S looks at the trading time frame, which is a 30-minute, and this D value here is basically looking at the higher time frame. So you don't have to look at the lower time frames. You don't have to look at the higher time frames or anything. We're automatically doing everything for you behind the scenes. All you have to do is concentrate on forecasting and seeing this trade has a high probability to get there. So you have a blue cross here, that's good. You have a %E, that's blue, that's good. And it's also increasing, that's good. Now, that's good for the entry bar. Remember, we have 2 bars, we validate the entry. Next bar comes in. All you have to do for the next bar here is look at this cross here. For the second bar, this has to be dark blue. It is. You stay in the trade. You do nothing else now except adjust your stop with the green dots. So now, every time those green dots move, you adjust your, whoops, I adjusted the whole thing. You just adjust your stop right there and move forward. Okay, so this is how it worked out. As your trade moves forward, you keep on adjusting the stop. Okay, your stop is at the green dot there. Move forward, keep on going, keep on going. I'm not guessing, I'm not sitting there thinking about this trade at all. Okay, what happened here? I got stopped out. How is this trade? Did it win or did it lose? It lost. Okay, probability said that this was high probability to sit there and go to those blue crosses. It didn't. This is a losing trade. I wanted to show you guys what a losing trade looks like. Okay, and this is a losing trade. When you lose, the key is that you should lose for what? Small. If you look at it, I entered here and lost here. Is that a big loss or is that small? If you look at here, I entered at 76.21 and I lost where? 76.27. That's 6 pips, 7 pips I lost. Is that bad or is that good? It's small. Everyone shows you what the ideal trade is. I did not want to show you that. I want to show you what a losing trade looks like. Okay? We're looking for past patterns to repeat. That doesn't mean they're always going to repeat, especially if you're on a 30-minute time frame, which is day trading. Everyone understand that? Yes? So if you're in a day trading time frame, what can happen? You have lower probabilities, don't you? You have to incorporate more rules. In order for this trading time frame to work, you could have sat there and looked for a multiple time frame support, which is these black crosses. You don't see them on here, but they could be here. Okay? But this is a losing trade here where you lost for a small amount. This fit all the rules, but guess what? You lost. Any questions on this? No? How's it feel? How's it feel to lose? Everyone talks about winning trades, but they never talk about losing trades at all. The key is, to become a successful trader, you can't think about your winning trades, you have to think about your losing trades. The key is when you lose, which you will, no one's 100%, no matter what anyone tells you. The key is when you lose, to lose small. When you win, to win what? Big. Everyone understand that? Yes? Here's another trade here that a lot of our students entered. We'll talk about it here. This is a stock trade here. We'll just go to this. Here is a green shaded area. This is a bullish opportunity. The D was green, the S was green. The dashes here are before the blue dots right there, okay? So now we enter the trade here. The cross here is dark blue, second is dark blue, that's good. This is E, 96%, this is 85%. And you could see the green dots are moving, 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 and then all of a sudden price hit it here. However, here's the thing. In the trade, you have this little red dot. It tells you overextension. That means to manage a trade on the lower time frame. So if you look at this trade here, it didn't get to the blue crosses, but we managed a trade on the lower time frame and we exited somewhere right there with profits. So there's different situations that can occur which are not part of past events. And that's where the indicator will sit there and automatically adjust to a point. If black swan event comes in, basically at that point, it will still sit there and allow you to make money if it decides to wants to go up. If it decides to reverse, it's going to get you out of the trade for a profit. Everyone see that? Yes? If you have any questions, we're going to end it right now on YouTube. If you guys have any questions, you can email us here. Okay.